Have you ever wondered why the rich seem to just keep getting richer, while most people are stuck running in place? It feels like they're playing a completely different game, doesn't it? Well, here's the secret. They are. It's not just about having more money to start with. It's about the mindset. It is about a set of unwritten rules. They live by rules that the majority of people never even learn, let alone follow. Today, we're pulling back the curtain. We're going to break down the 7 fundamental money rules that the wealthy live by, rules that often go completely ignored by everyone else. This isn't about shaming anyone. It's about empowerment. Because once you understand the rules, you can start playing the game to win. So, grab a notebook, get comfortable, and let's dive into the principles that build lasting wealth. Rule number 1. The rich save to invest, not just to spend. This is a crucial distinction. Most people save money with a defensive mindset. They save for a rainy day, for an emergency, or for a big purchase like a new TV or a vacation. The money sits in a savings account, waiting to be spent. It's a safety net, which is good, but it's passive. The wealthy, on the other hand, see saving as an offensive strategy. Every single dollar they set aside has a job to do. Its purpose isn't comfort, it's opportunity. They aren't just hoarding cash under a mattress, they are accumulating capital. This capital is then deployed into the world to work for them. They use it to buy assets, things that will generate even more money. Think of it like this. A poor mindset saves money to buy liabilities that consume cash, while a wealthy mindset saves money to acquire assets that produce cash. It's a fundamental shift from saving for security to saving for growth. Your savings account shouldn't be a waiting room, it should be a launchpad. This brings us directly to rule number 2. The rich focus on cash flow. True wealth isn't measured by the size of your paycheck. A doctor making $500,000 a year, but spending $510,000 is going broke. Wealth is about how much money comes in without you actively trading your time for it. This is the magic of cash flow. Most people are trapped in a linear income model. They trade 1 hour of their time for a fixed amount of money. If they don't work, they don't earn. They're chasing higher salaries, bigger bonuses, and more over time. The rich chase systems. They focus on building and acquiring streams of income that work for them 24/7, whether they're sleeping, on vacation, or working on their next project. We're talking about things like rental income from real estate, dividends from stocks, royalties from a book, or a piece of music, or profits from a business that doesn't require their daily presence. They understand that their time is finite, so the only way to scale their wealth is to decouple it from the hours they work. The goal isn't just to earn more, it's to own the systems that earn for you. Next up, rule number 3. The rich manage risk, while the poor avoid it entirely. This might sound counterintuitive. Don't rich people take huge risks? Not exactly. They take calculated risks. The average person is terrified of losing money. The thought of the stock market dropping or a business venture failing is so scary that they choose the safest option. Doing nothing. They leave their money in a savings account, where it's guaranteed to lose value over time due to inflation. The wealthy understand that there's no reward without risk, but instead of blindly gambling, they become students of risk. They research, they analyze, they diversify, and they develop strategies to mitigate potential losses. They might lose on one investment, but their portfolio is structured to win in the long run. They know that the biggest risk of all is not taking any risk. Fear keeps you on the sidelines, where you are guaranteed to miss every opportunity. Knowledge, on the other hand, allows you to step onto the field, understand the game, and make intelligent plays. Fear keeps you broke. Knowledge is what sets you free. This leads us to a big one. Rule number 4. The rich buy assets, not appearances. This is where a lot of people get tripped up. Society tells us that success looks like a fancy car, designer clothes, and the latest smartphone. So, people with a poor mindset spend their hard-earned money on things to look rich. The problem? These are all liabilities. The moment you drive that new car off the lot, it loses thousands of dollars in value. That phone will be obsolete in a year. The rich couldn't care less about looking rich. They care about being rich, and you get there by buying things that make you richer over time. These are assets. An asset is anything that appreciates in value or puts money in your pocket. Think of stocks, bonds, income-generating real estate, or a stake in a profitable business. The wealthy might live in a modest house and drive a 10-year-old car, but their investment portfolio is generating more money in a month than most people make in a year. They delay gratification. They prioritize building a strong financial foundation over projecting a flimsy image of success. Remember, what you own should be working for you, not the other way around. Rule number 5 is a game changer. The rich value time more than money. Think about the classic trade-off. Most people trade their time for money. They work 40, 50, 60 hours a week to earn a paycheck. Their time is the commodity they sell. The wealthy flip this equation on its head. They use their money to buy back their time. How do they do this? Through delegation and automation. They hire people to handle tasks that are not the best use of their skills, whether it's cleaning the house, managing their calendar, or handling customer service for their business. They invest in software and systems that automate repetitive processes. This frees them up to focus on the high-level, big-picture decisions that truly move the needle and create massive value. They understand a profound truth. You can always make more money, but you can never ever make more time. Time is the one non-renewable resource we all have. The poor trade their most valuable asset for money. The rich use money to protect and multiply their most valuable asset. This brings us to Rule 6, which is perhaps the foundation for all the others. The rich never stop learning. For so many people, learning is something that ends when you graduate from high school or college. You get your diploma, you get a job, and that's it, you're done. For the wealthy, graduation is just the beginning. They are voracious, lifelong learners. Money follows knowledge. The world is constantly changing new technologies, new markets, new strategies. The rich stay ahead of the curve by constantly educating themselves. They read books, they listen to podcasts, they attend seminars, they join mastermind groups with other successful people. They aren't just learning about finance, they're learning about psychology, history, technology, and leadership. Crucially, they learn from their mistakes. When an investment goes wrong, they don't just get angry or give up, they perform a post-mortem. What went wrong? What could I have done differently? What's the lesson here? A poor mindset repeats mistakes. A wealthy mindset learns from them, adapts, and becomes stronger. Your income will rarely outgrow your personal development. And finally, we arrive at rule number 7. The rich play the long game. We live in a culture of instant gratification. We want six-pack abs in 6 weeks. We want overnight stock market windfalls, and we want immediate results for minimal effort. This is the mindset that fuels get-rich-quick schemes and lottery ticket sales. It's a short-term dopamine-driven approach to life. Building genuine sustainable wealth is the exact opposite. It's a marathon, not a sprint. It takes years, often decades, of patience, consistency, and disciplined decision-making. It's about planting seeds today that you won't harvest for a very long time. It's about consistently investing a portion of your income, month after month, year after year, and letting the power of compound interest work its quiet magic. The rich aren't looking for a quick hit. They're building a dynasty. They want lasting results that will provide for them, their families, and even future generations. They have the patience to see it through, even when the results aren't immediately visible. So let's wrap this up. Being rich isn't some genetic lottery. The people who build wealth aren't necessarily smarter or luckier than anyone else. They are different by behavior. They operate on a different set of principles. They save to invest, focus on cash flow, manage risk, buy assets, value their time, never stop learning, and play the long game. The good news is that these are not secrets reserved for an elite club. They are strategies and mindsets that anyone can adopt. It starts today. It starts with your next paycheck. It starts with the next book you decide to read, instead of watching another series. You don't have to change everything overnight. Start by applying just one of these rules. The journey to wealth isn't about luck. It's about discipline. Repeat it over and over, day after day, until it becomes your new normal. Thank you so much for spending your valuable time with me today. I hope this gave you some powerful new ideas to think about. If you found this helpful, do me a favor and hit that like button. It really helps the channel. And for more content designed to help you build a wealthier life, make sure you subscribe and turn on notifications. I'd love to hear your thoughts in the comments below. Which rule resonated with you the most? Thanks again, and I'll see you in the next video.